Hey everybody, hope everyone's doing well and had a good day. This is the overview of the Emini 5-minute chart for Tuesday, September 10th, 2024. Starting off with the daily chart, here's what we had. So the market's in a trading range. Bull channel, trendline break, couple of legs down. A good rally for the bulls, but top of a range. Tight trading range here, expanding triangle. We're getting a bear breakout, but the bear breakout here is an outside bar, a possible third leg down. It had bad follow through, and then another sell climax, a possible vacuum test of support. Maybe 50% pullback of the rally. And you can see what happened yesterday. The market rallied. It's an inside bar. It's disappointing for the bears. If the bears see this as a strong breakout, they sell the close. Betting will go lower. That's a disappointing entry bar. And sell the close bears are disappointed. And that creates support in the buy zone of the bull bar, which, in other words, is the bottom half of the bar, 50% and lower. So I suspect that if we go to the midpoint of yesterday, there will probably be buyers there. And that's here, shown in that red line, and you can see what happened. But anyway, for the 5-minute chart, I have yesterday's high drawn with a blue horizontal line. Most bars are breakout bars. So when you think about any chart, only about 10% of the bars are inside bars. And inside bars are the only type of bar that are not breaking out. And so if most bars break out, and that applies to any time frame because markets are fractal, then that means it applies to the daily chart. And you can see today we actually gapped up above yesterday's high. So we have a breakout on the gap up. You can view the gap from the close of yesterday, the close of 81, to the open of the day, bar 1. You can view that gap as a bull breakout. You can just imagine there's a bull bar that opened here and closed here. And if we imagine that, just using the context from what we see from the day only session yesterday, we see a broad bull channel, we see a pretty deep sell-off, and then a rally, but then another deep sell-off, and then here, bull bar, but bad follow-through, all the way up, bull bar, bad follow-through. These are consecutive buy climaxes, and then this one is the biggest buy climax of them all. And if you think about what happened earlier, this rally sort of didn't have much of a credible double top. It was more of a rounded top, and bulls who bought up here, if they scaled in, they were able to make a profit if they held onto the trade. But what's a bull going to do if they bought somewhere up here and they had to sit through this drawdown? They're probably going to look to get out of their longs at this price. So yes, bull breakout of yesterday's high, but probably sellers above the high. In a broad channel, and this applies to trading ranges as well, in the bull case, bulls are taking profits above bars or above swing points, and they're buying below bars, below swing points, and we have a broad bull channel. So bulls are buying low and building positions and even scaling in as the market goes against them. But once we get to a new high, they're going to look to take profits. And bears, they see how deep these pullbacks are, and they can see they can make money even if they enter on a stop. And that's been working here, it's been working here, and now we have 1, 2, 3 pushes up to bar 1. So some bears will sell just for that reason. 3 pushes up, stop order bears making money, lots of overlap. Even if it is a bull channel, bears are able to make money. So we broke out above yesterday's high, but then bar 1 was a bear bar. So you can see that as a bull breakout with no follow through. For the bears, if you're selling bar 1, you're selling against maybe a 6-bar bull micro channel. The gap up, the rally since bar 77, is likely to get a second leg. The first reversal down will probably fail. Plus, 80% of the time, you get a trading range open. And so there's probably buyers below bar 1 and sellers above bar 1. Also, since we did break above yesterday's high, it was expected to be resistance, and now we opened up here. Maybe the first retest finds buyers. Bar 2, trying to break out below bar 1, but look at all the overlap. The majority of bar 2 overlaps bar 1, and on a smaller time frame, this may be a bear breakout, a pullback, and a second leg, and we're testing possible support. Bar 3 tried to break out lower, back into yesterday's range, but then reversed up. So bar 3, a strong bull bar, closing on its high. So what about buying above bar 3? It's a high one after a bull breakout, but the context is bad. You're buying high in a broad bull channel or a trading range. And even with the first 3 bars, we did not break out above bar 1. So if you're buying here, you're buying at the top of a smaller trading range, probably sellers above bar 3. And that's what happened on bar 4. But 4, you can see all of bar 4 overlaps 3 and the other bars in the opening range. So it's a tight trading range, open, limit order market. Now we have a double top with 1 and 4, but tight trading range. And if you're selling here, you're selling low in the tight trading range, and the gap up is still likely to get a second leg up. So probably buyers below bar 4. And again, we tried to break out back into yesterday's range below yesterday's high and then reversed back up. So now bar 5, we have a high 2, 1 leg, pullback, a second leg, double bottom, 3 and 5, bull, reversal bar closing on its high. So what about buying 5? Some traders might, but you're betting on basically another trend from the open, or you're betting on a trend from the open day, and you're betting on this breakout succeeding and, of course, going higher. And it's okay to take the trade, but you have to have expectations and you have to know how to manage the trade. So if you buy above bar 5, what you really want to see is an entry bar, sort of like bar 3, a bull bar closing strong at a new high. But if you are buying here on a stop, you're buying high in a tight trading range. And then 6, we rallied a little higher. Bulls who bought the close of 3, disappointed 4, getting out break even. Now 6, reversing down. You can call it a double top, a second or third reversal down below 6. Decent signal bar, but low 2 at the bottom of a tight trading range. The bulls see it as a bull flag, bull breakout, maybe 3 legs sideways to down. They look to buy for continuation to the upside. Bad entry bar for the bears, selling below 6, probably buyers below and going to go back higher, but bar 7 is a weak stop order signal bar for the bulls, so probably sellers not far above bar 7. And then bar 8, we had an outside doji. The market broke out to the downside. And if you look at the outside bar compared to the bar before it, you can see the bears had a bigger breakout. There's a bigger distance from the low of bar 7 to the low of bar 8 than the distance from the high of 7 to the high of 8. So in terms of distance here, although it's confusing and it's almost all, well, actually this bar had no body, so it's a doji. But you can see the market broke out much further to the downside. So any bull who bought below 7, disappointed with the drawdown, they may just look to exit at break even. And if a bear sold above bar 7, probably not very disappointed with their entry bar. Not ideal, but the market did not go as far against them as it did against limit order bulls. So this might be a big enough breakout for a second leg. And also bar 8, maybe it's a high 3. So we gapped up and then 1 push down, 3, 5, and then 8. 8 breaking out below the channel line, so maybe exhaustion, testing the moving average. But we've only had 2 bull bars in the first 8 bars. So 25% of the bars are bull bars, and that's not very bullish. Plus bar 8, it's a big signal bar, so if you're buying above bar 8, your 1-to-1 is up here. And is it 60% certain that we're going up here before down here? No. At best, it's 50%. And if that's the case, then you cannot take the trade. It's not a positive trader's equation. So more likely, there are sellers above bar 8, but in this case, they came in on the close. Bar 9, a little bit of a surprise bar. Strong enough breakout for a second leg, but sort of an emotional bar. It's one of those bars, it's a big trend bar, but it's in a trading range. So is the market clearly always in short? I'm not sure, because if you simply took away bar 9, then it's not so clearly always in short. So whenever the always in becomes more clear based on one bar, it's a problem, because I've talked about in the past time control versus price control. And as big as this breakout is, it's the biggest bar of the day, and a lot of the bars below the prior bar. That's good for the bears. We're still probably going to get a second leg down. But the problem is time control for the bears. The past 3 bars before the trend bar are trading range bars with a lot of overlap in a very tight opening range. And then we suddenly get this big bear breakout, which at this point still needs follow through. But one of the problems is context. The market is either in a trading range or a broad bull channel. So bar 9 might be a result of bulls stepping aside. The market may just be vacuuming down to support, to an area where bulls are willing to buy. And then no follow through on bar 10. What's also common with bars like 9 is they get brief second legs. We know it's likely that 9 gets a second leg, but we also know that in trading ranges, breakouts get deep pullbacks. And so it may get a brief second leg, and bar 11 may be that brief second leg. But what are sell the close bears doing after bar 10? Or if you sold below bar 9 and you get bar 10, you're disappointed. So they use bar 11 to exit their shorts at break even, and they'll look to sell higher. So then we go to buy vacuum, bar 12. But compare bar 12 to bar 9. And we can see bar 9 is bigger than bar 12. And bar 9 got a couple of bars completely below the moving average. More of bar 9 is below the moving average than the amount of bar 12 is above the moving average. So this may simply be a breakout pullback. There are trap traders above, maybe bar 7 low is a breakout point. And so the market broke out, and then we got a low 1 short that failed, and we're getting a buy vacuum testing resistance. 12 is disappointing for the bears. It's a stronger and deeper pullback than they would have liked, and 12 is strong enough to get its own second leg. So the bears may wait for a couple of legs sideways to up before looking to sell again. 12 is also a trendline break on a smaller time frame. Bar 9 is a bear trend. 12 broke that trend line. I'll pull this up on a smaller time frame in a few minutes. But the point that I'm getting at is that 12 broke the trend line, so any retest down here should lead to support, and the bulls will go for a major trend reversal. So bulls, after this trend line break, the rally, strong enough for a second leg, but the bulls are not interested in buying up here. It's a trading range. They want to buy low. So there's an imbalance. Bulls are unwilling to buy. Bears see a breakout pullback. Everybody sells. 12 gets a brief second leg, but if you bought the close of 12 and 13 was your entry bar, you might just use 14 to exit at break even. That's what happened on 15. Now we have a second reversal on 15, but look at all the overlap. So there might be more buyers below 15. It's becoming confusing. 16, a bull bar. So we're alternating bars, every bar, bear bar, bull bar, every single bar. So it doesn't seem like anybody is in control. But so far, the most dominant feature of the day is bar 9. We do have an open gap from the bar 7 low. You can also see the body gap. There's a space between the bodies. The close is up here, the close is down here. And that's a point for the bears. So now we have a bull breakout, a two-legged pullback, high 2 above 16. But if you're buying, it's similar to buying bar 5. You're buying at the top of a tight trading range after a bear breakout that still needs a second leg. 11 might be a brief second leg, but it's not a symmetrical second leg. 17 testing lower. So the bears who sold bar 9, or maybe they sold this low one on bar 11, they're disappointed with 12. The bears, now maybe they have a second leg, bar 9, pull back, second leg, where the second leg subdivided into 1, 2, 3 pushes. Remember I mentioned the bulls are going for a major trend reversal. So bar 9, bear trend, 12, trend line break, and then a wedge double bottom. So then we get bar 18, bulls can buy above 18, looking for a major trend reversal. The problem is I'm calling it a major trend reversal, but the bar 9 trend is really just a sell vacuum in a trading range, and it's minor, and this is not enough bars for a major reversal. Bar 12 still needs a second leg, just like over here, bar 9 got bar 11, but that wasn't symmetrical, not a sufficient second leg. Then we got 1 pullback, 2. Just like over here, bar 12 bull breakout, brief second leg, but not really symmetrical. We may end up getting a bar 12 leg 1, a deeper pullback, and then a delayed, more symmetrical second leg. 18 is a reasonable buy, but if you did buy 18, your entry bar is disappointing, and then you get an outside bar. And then 21 is a weak bull bar, closing below its midpoint. 22, lots of overlap. Another bar with a lot of overlap, implied pullbacks. 24, another bull bar, closing below its midpoint. So this is not very strong for the bulls. In fact, for the bulls, what we might have here is a second leg trap. Bar 12, leg 1, deep pullback, leg 2, and leg 2 subdivided into 1, 2, 3 legs. And where are we testing? We're testing the breakout point, the bar 7 low. So a couple of reasons to expect resistance here. So then you get a bar like 25, bear reversal bar, micro double top. Bulls, if they bought, they can get out below 25. Bears, they can sell. They see 3 legs up, and on a higher time frame, it's a big low 2. Bear breakout, low 1 here, low 2 here. Before I get into this, let's look at up to 11:30 on the 1 minute chart, so we can see the major trend reversal that I'm talking about. So right here, we have this sell-off, and it's consecutive sell climaxes, and it is parabolic. So 1, 2, 3, the third push goes well beyond the bear channel line. That's an overshoot, and we're probably going to correct. And then we get this trend line break. So the bear trend line that I'm talking about is here. You can even say it's here. I was going to say here. But either way, trend line break, the market goes a big distance beyond the trend line, but consecutive buy climaxes. But big enough minor reversal there's probably buyers below. So then on the retest, we're going to see the wedge. 1, 2, 3. You can see bears disappointed, buying back shorts. Bulls can buy. Here's a good signal bar, a second reversal. It's a wedge and a higher low double bottom. And then the market rallies, but look to the left. The market is in a trading range. So really not a major reversal. And you could call it a major trend reversal, but recognize that 60% of major trend reversals result in trading ranges or trend resumption. Only 40% result in actually major trend reversals, trends in the opposite direction. So reasonable for bulls to get out below 25, and also reasonable for bears to sell on a stop below bar 25. And then 26, now we have a bear breakout and follow through. The follow through bar bigger than the breakout bar, and very little overlap. Only maybe 20% of this bar overlaps the prior bar. We're crossing the moving average. Bear breakout, big low 2. Maybe what could be happening is the bears get leg 1, then a deep pullback, and then maybe leg 2 down to here. And then more follow through 27. It's an inside bar. It's an implied low 1. And 25, 26, 27, that's a leg 1 breakout. There's a very high probability that this bear breakout gets a second leg down, even if there's a pullback. And you can see 27 did rally, but we didn't even get to the low of the prior bar, so we have a gap. And then more follow through, bulls giving up, bears selling, and even bigger follow through bar, little climactic. It's the biggest bear bar we've had in many bars. The concern for the bears is it's leg 1, leg 2, so maybe a second leg trap in a trading range. And technically, we're still in a broad bull channel. We have a low, higher low, and still a higher low. Until we get below here, the bulls can argue it's still a broad bull channel. But the bears, they see a high, a low, lower low. So we're getting a bear trend and a bull trend. And whenever that's the case, the market is in a trading range. More follow through, 30. Now the bears broke below the last major higher low. So the bull trend argument is invalid. The market is either in a trading range or a bear trend at this point. The problem for the bears is this is climactic. It's 2 legs down, and just look to the left. The market rallies for a lot of points, sells off for a lot of points, back and forth, big up, big down. And trading ranges move in 2 or 3-legged patterns, and we've already had 2 legs down. And that's really fascinating that even the pullbacks, it's all fractal. So here's leg 1, and then a 2-legged pullback, and then leg 2. What's the target for the bears? One target might be the bar 22 high. Bar 22 was not a particularly strong buy signal bar, but you can see what happened. The market rallied very strongly, so traders were trapped here. This is a target, and if we get back here, there's probably going to be support. So the downside might be limited. And just like bar 9, this breakout might be a sell vacuum testing support. More follow through, 31. We're getting closer to that target. But then an inside bar, 32. It's a low 1 short, but low in a trading range after 2 legs down. Probably buyers below. 33 triggered the low 1, but it's an outside bar. You can see the market rallied from the low of 31 up to the high of 32. That's a big enough rally for a second leg. Buyers below, bears taking profits, bulls buying for a scalp. And then we get 34. But 34 is stronger than the bears would like. So always in bears, they see a second reversal. It's implied. But we tried to go up on 32, reversed back down, trying to go up on 34. Second reversal, good signal bar, micro double bottom, and double bottom over here. Low in a trading range after 2 legs down. The risk is real that we can reverse from here. As strong as this is, just look at yesterday. As strong as this rally was, we got 45, a second reversal, and then the market started to drift sideways to down, and we got an endless pullback. So always in bears, can exit above 34, bulls can buy, taking a chance. And then a decent entry bar for the bulls. It's really not ideal. It's a trading range bar, but everything is trending. The lows are trending, the highs, the opens, and the closes. For the bears, it's a weak stop order. There's probably buyers below 35, and 34, 35 might be a leg one breakout. So the first reversal should fail, and we'll probably go sideways to up. 36, low 1, you can call it a low 2, 32, low 1, 36, low 2, but now a 3-bar bull micro channel. You can see we're starting to get a micro channel all the way to the moving average, and then we get bar 41. So at this point we had an 8-bar bull micro channel. Once you get to 6 or 7 bars, the odds of a pullback become greater than the odds of continuation of a micro channel. When you combine that stat with how climactic bar 41 was, it's the biggest bull bar of all the bars, you can expect profit taking on bar 41. So on the close of 41, bulls might just take profits. We're also testing a breakout point to the left. The bear breakout, bulls buy here, maybe betting that there will be a double bottom, and they get trapped. So this becomes resistance for a couple of reasons. But this is a strong enough breakout that any reversal should be minor. So even if we pull back here, bulls will probably buy the first reversal. So 42, bulls take profits. Bears, maybe they sell for a scalp, but bears selling here know that this is not going to lead to a bear trend. And any bear who is short down here or anywhere is getting trapped by this bull breakout. So they'll use any small pullback to exit their shorts. Bulls, it's a micro channel. They're looking to buy the first pullback, and there was the first pullback. Even though it's a big, strong bear trend bar, it's the first bear trend bar in maybe 10 bars. If you think about the day structure, the context, it's probably a trading range day, and we might be in the lower half of the range here. And this was a strong enough leg one breakout for a second leg up. And then the market quickly getting a second leg up. Bar 45, a possible measuring gap. So from the start of the bull leg to the breakout point, 45 is either a measuring gap or an exhaustion gap. If bar 45 was occurring up here at the top of the range, I would probably think of it more likely as an exhaustion gap. But because we're in the middle of the range, we're not getting a lot of selling pressure. We could, and look at the target, we're still within the day's range, the top of the range, and the momentum is good for the bulls. We could get up here. So this might be a measuring gap. And then minimum follow through for the bulls. They prevented a bear body. And then the market continued to drift higher. So spike in channel, bull trend. Bar 61. So you can see we're getting close to the target. It's consecutive buy climaxes. Maybe we'll pull back, but this is a tight bull channel. The bears need a trend line break. You can see we're going sideways. 69, a breakout of a very tight trading range. You can see lots of overlap, lots of dojis, limit order market. If you're long and the market starts doing this, it's reasonable to get out. It's also okay to hold, but it starts to become breakout mode. And because of the type of day we've had with a lot of trading range price action, it's not unreasonable to get out of a long somewhere during this and wait for more clarity. So the bulls getting a breakout attempt, but a very tight trading range. We're testing the measuring gap, measured move, so we've reached that, but now we're getting close to the high of the day where there are probably sellers. It's a big down, big up trading range. And with this tight trading range, this was an area of agreement. So any breakout will probably fail, come back to the apex of the trading range. And you can see that's where bar 74 tested. So bull breakout, decent bull breakout, pretty good distance above this trading range. It should get a second leg, but we got a deep pullback. Once we get here, what are the bears going to do if they're selling through here? They're selling above bars. You sell above bar 67, and this is what you get. As long as you don't panic, maybe you scale in, then you can avoid a loss. 74 relieves you. But when you get 74, you're probably going to exit the shorts. And so the bears are buying back shorts. The bulls are always buying, and that was a strong enough breakout for a second leg. We're testing support. It's probably going to bounce here. We got a bounce, but 75, 76, leg one, and then an outside bar, so a pullback. Maybe leg two, double top. There might be resistance up here. And we went more sideways into the close. For stop orders today, I thought bar 6 was reasonable, not high probability, but betting on a failed breakout of yesterday's high. It's a second or third reversal, good signal bar. There's room to the moving average. And then I thought 18 was a reasonable stop order trade. 25, 26, you could sell the close. 27, sell below. You could sell any of these bars until it becomes disappointing. 34, you could buy above. And then maybe you take a chance. It's a 4-bar, 5-bar micro channel. You start to buy above bull bars and just trail a stop. And then you finally get the give up bar, 41. Strong enough leg one, you can buy the high one, 43. And it's always in long, so you can buy really anywhere. Starts to get more two-sided toward the top of the range, so okay to get out on any sign of weakness. We start to go sideways, maybe just exit. Not ideal for stop orders up here. And then maybe you buy above 75, but late in the day, and if you're buying here, you're buying high in the range. The upside is probably limited. So where do we go tomorrow? I think this sell-off was strong enough for a second leg down, even though it's not all that strong. It's a sell climax with bad follow-through, sell climax, bad follow-through. But it went a big enough distance that even if we get a deep pullback, I think we need at least a double bottom to reverse this. Then you think about yesterday and today, the market rallied, pulled back, rallied again. So that might be two legs. It's actually more clear. Maybe I'll pull up the 15-minute chart. It might be best. So overall, the higher time frames, this might all be a bear channel, and what we're getting, or at least what we were getting, was a broad bull channel. But then today, when this breakout occurred below this major higher low, the market is now either in a bear trend or a trading range. The bears are hoping that this becomes a lower high, and then we sell off, back down and test the low of Friday. So this might be a test target for the bears. We know that bull channel means bear flag, so bear breakout, bull channel. More likely we get a bear breakout, and we did, but the breakout failed. So we might have to go more sideways. But the bears, maybe they see 3 or 4 pushes up, and they see this breakout is strong enough as for needing a second leg. The only concern I have with this bear breakout is when we look back here, it may have been a late leg. maybe 1, 2, 3, and 3 overshot the channel line. And then we got a trend line break and a possible major trend reversal for the bulls. But if you think about the big picture, we're getting a lot of lower highs. And a bull channel in a bear environment might simply be a bear flag. Now it is possible, because we're in a trading range, that we get a violent reversal up. This becomes a failed bear breakout of this expanding triangle, and maybe we vacuum up to here. The bulls now have a trend bar and then a follow-through bar. That's disappointing for the bears. So maybe at best, if you think about today, it's a low one short signal bar for the bears, but disappointing if we get to yesterday's, or if we get to today's low tomorrow, there's probably buyers below. All right, thanks everybody for watching. I hope everyone has a good rest of their night.